Hello and welcome back to the channel. Today we're going to be talking about taxes, and I have a tax expert with us. This is Carl Turner, and he has a website that I'm going to be sending you guys to, and that is expattaxthailand.com. There'll be a link down in the description. So we're going to ask him all the questions you guys have been asking me. We're not going to hit all of them, and again, all of us are from different countries watching these videos. So there's going to be a lot of resources and frequently asked questions that he has on his website that you really need to check out. So, Carl, welcome to the channel.
Thank you for having me.
Thank you for being here. So my first question that I've been just dying to ask you is, I know that I'm from the United States, and we have a signed treaty with Thailand. I think it's called a double taxation treaty.
Double taxation agreement, yeah, exactly right.
And I'm assuming that means that any money I make in the US that I'm spending here can't be taxed again. Is that true?
Okay. It depends. So there's a lot of factors to look at with this. So first of all, we need to look at, do you qualify as a Thai tax resident? So does that mean that you potentially have tax to pay in Thailand or not? So let's talk through that first. So what is the definition of a Thai tax resident? So if you are in Thailand in a calendar year, so the Thai tax year is the calendar year, 1st of January to 31st of December. If you are in Thailand for 180 days or more in a calendar year, you are defined as a Thai tax resident.
Okay.
Then we need to see what you've done. So if you remit, so transfer foreign source income, so money from overseas into Thailand, then we need to look at what's the source of that money, and we need to see, is that taxable or not? So remember, Thailand is a remittance tax basis, so very different to the US, where you write down everything and then you calculate the tax. With the Thai tax system, we only look at money that you've remitted, transferred or spent in Thailand. So it does depend, but it depends. Have you been here 180 days or more?
Okay.
Yes or no? Have you remitted, transferred or spent what's defined as foreign source income in Thailand? Then you may have to file a Thai tax return. Does that make sense?
A little bit. Let me run you through, I guess, just my personal scenario, and we'll just see how it goes. So,
okay, cool.
I've got some income sources in the US that people pay. And when there's enough money in our bank account in the US, we transfer it over here to Thailand so we can live.
For your situation, you need to look at the double taxation agreement between that jurisdiction and Thailand. So with the US-Thai double taxation agreement, it shows that that income may be taxed in Thailand. So it means US has the right to tax it.
And they are taxing it.
Yeah, correct. Then you send that money, remit the money to Thailand. If you send that into Thailand when you're a Thai tax resident, 180 days or more, then if that is income, salary, dividends, investment capital gains, pension income, but not social security,
okay,
then you need to file a Thai tax return because that is classed as income. Now, you look at the double taxation agreement and see, okay, it may be taxed in Thailand. We can use the tax paid for that source, that income, and use that tax paid as a tax credit in Thailand. So you have to file, but it's likely the tax rate in the US will be higher than what you've on the money you brought in. So you don't need to worry. You know, the system's set up, Thai Revenue have done it's really set up very nicely for people where you can claim tax credits. You know, it's not to punitively tax people, and the Thai Revenue's produced a lot of information now to explain this, but I'm here to explain it in simple terms.
Right, and I know everybody's tax situation is going to be different. And let's say you're a citizen from England or something like that. It's just going to work a little bit different, which is why we're referring you to a tax expert to figure out what's going to work exactly for you. Yeah. All right, so what are let's say somebody who wants to move here to retire. So they have good retirement income, they move over here. Would they be taxed if they're just living off their retirement?
Yeah, okay. Yeah, let's go through this in more detail. So we have Expats Thailand, we're a Thai company, fully Thai authorized and regulated. I'm the spokesman for the company. We have a lot smarter people than me that do all the analysis and advice, even ex-revenue officers. So I can advise, generically, and then we get someone, an expert, to actually do the work. So I can explain this generically. So let's say you're a pensioner and you are living in Thailand 180 days or more, so you meet the criteria to be a Thai tax resident. Then we look at what you bring into Thailand. So if they bring pension income, we have to look at where the pension income's from. If it is from the US, so social security money, then that is not taxable. It's not assessable income. So for these people, if that's their only source of income, for your US listeners and viewers, if their only source of income is US social security or military pension, or they've worked for the US government, like a federal pension, this is not assessable income. They don't need to file a tax return for that income. They don't need to do anything. So that's good for those people. We can help them to understand they need to do anything. Now, if it's different pensions, it all depends on that double taxation agreement. So let's talk about some others. So if they're from the UK and they bring in a state pension or a private pension, that may be taxed if it's brought into Thailand. So same principle as you with your income, you have to file that on the Thai tax return, and then you can use any tax paid in the UK as a tax credit to offset the tax. So the Thai revenue allow you to do this, so it's quite favorable for people. So it all depends. Most double taxation agreements show that if you bring in that pension money, it's potentially taxed in Thailand. You have to file, but you can use tax credits to offset that. There's 61 double taxation agreements. So feel free to look at our website. We've done many videos for different nationalities, and we've got all the information for free. We're happy to help people for free. That's the key, is until people understand the rules, they can't make a decision what they need to do. So it's our job to help people make better informed decisions by understanding the rules. So hope that helps. It's complicated.
No, obviously it is, and I'm so I need to spend time on your website as well. I know you got a good frequently asked questions section on your website that talks about things in specific, and you've even got some for the different countries that people come on your website for, so that's good. So do you have a feeling that this new tax law is going to prevent people from retiring or moving to Thailand? What's your overall thought on that?
No, I think Thailand's still got some very good benefits for people moving to Thailand, and of course you can offset. Doesn't necessarily mean you have to pay tax. It just means that you have to file a tax return, and you can claim the tax credits from elsewhere. So I think people just don't need to worry. For most cases, it's more of an admin issue rather than a punitive tax issue. It's only for certain circumstances where they will have, tax to file or tax to pay. But everyone does need to start to comply if they are in Thailand 180 days or more, and they're bringing in these foreign source income types that are not excluded. So should we go through a few more that are excluded? Because that might be good.
Yeah, that'd be great.
So if you have a Canadian pension, excellent. That's the double taxation agreement shows that Canadian pensions are not taxable in Thailand. They're excluded. They're only taxed in Canada. So for those people, if they've only got Canadian pensions, they don't need to file a Thai tax return. They don't need a tax ID. Social security we mentioned earlier. Most double taxation agreements show if you've worked for a government, so civil service, military, they're usually excluded on the double taxation agreement. So if you've got a question, send us a question, we can help you answer for your specifics. So they're excluded.
And we talked before we ever saw this video how Thailand things change and evolve. So I imagine there's a lot of questions that can't be answered as of right now. That'd be safe to say.
No, I think, to be honest, I think the revenue department has done a really good job. Like they've rewritten a lot of the tax code. They've put a lot of information out there. Really, what we're helping people with is understand that in simple terms in English to explain this. So the revenue have actually got rules regulations for everything, whether it's capital gains, whether
Okay.
it's investment property, crypto. They've done a lot of work with crypto, changing the revenue code for crypto gains, or if people are receiving tokens and things like this, or mining.
Right.
It's all in the revenue code.
All right, so for people watching this that are thinking real quick, nope, not Thailand, nope, not anymore, would you suggest that they go onto your website and investigate this a little bit more? And that being said, if they wanted some questions answered, can they ask you? Is there a charge to ask you a question?
Yeah, so what we've really prided ourselves on is simple. Someone sends in a question, that's a generic type question. We're happy to answer. We get back to everyone that asks a question. But
Through your website.
Through the website, and also we provide free 15-minute consultations online, and that's not to sell our services. We've got over 250 5-star reviews from this kind of service, and what we do is really help people understand what are the implications for them,
Right.
and then they can decide what they need to do. But for people moving to Thailand, we've got a few videos online to explain what they need to do to prepare to come and what the implications are. But the reality is, for a lot of people moving to Thailand, they can prepare before they move to set themselves up well for this.
Okay.
And then also in the future, let's say they do have a pension, they can use the tax credits to offset the tax in Thailand. So Thailand's just moving in line with most of our revenue departments. There's no, and they're not targeting expats because they're the same for Thais. The same rules apply.
Right.
Yeah.
Right. Well, great. Well, thank you very much. I guess if you do need more information on this, definitely check out the website. What you don't want to do is ask me in the comments, because I am not the tax expert. That would be him, and he's probably not going to be reading all the comments. So you definitely want to go through his website to ask him a question on this. But I really do appreciate you being with us today, and I hope this was helpful for everyone, or at least got you thinking about the whole tax thing. I know I'm thinking about it now. And anyway, thank you very much. And we're going to end this by saying thank you in Thai, which is Khap Khun Khap.